All right, guys, today we're going to go over one of the two premier zero down or down payment assistance loans in Texas. This one's commonly referred to as TSAHC, even though that's not how it's spelled. But I'm going to go over with you just some different options on this thing, some restrictions, underwriting rules, biggest advantages, drawbacks, and then show you really up front here, first before most of that, an example of what numbers are going to look like every month, with an interest rate, and what's due at closing on a sample $350,000 purchase price. So basically what it is it's a down payment assistance lien in the form of a few different options. So you get your maximum 97% conventional or 96.5% FHA loan, and then you pair that with number one, you could do a 3-year deferred second lien. That gives you then 2 to 5% of a down payment assistance lien. No payment needs to be made on that second lien. And then the second option that you can do of the couple that are really, these are the two most important, most popular, is the grant. Today you can get 2% to 3% of a grant, and that grant is something that you're going to be able to have be forgiven and basically be your money after 6 payments. After like 240 days of that loan, it's like yours. So but basically we get this pricing just straight from the site every day. If you want to go on their site, see what they have. This is just our 3-year deferred forgivable second lien right here. You see FHA, USDA, VA, non-bond, 620 plus is that credit score minimum requirement. And the one I'm going to show you is the 5% right here, this down payment assistance program, and pair it with an FHA loan. So this one from the couple weeks ago, I printed out this pricing. It's from Christmas Eve. Gives an interest rate of 6.75. And as you'll see here, if you see the less secondary financing amount, 17,183. That is 5% of the loan amount. And basically it's going to bring your total approximate funds on this one to close from, if you didn't have that 17,500, you'd be looking closer to 26,000 and change to a closing. Now for this loan, there is a 1% origination fee on this. Yeah, you could take this one fee away if you were just doing a regular FHA loan, but like, this is the beauty of the product, is that you don't have to bring 3% or 3.5% down and then bring about 3% in closing costs. That 97.68 total is looking a lot better. Not only is that great, but you can still pair this on top of that with, think of other places you could get money from, possibly your 401k, pull money out of there, get some money from maybe an employer or a family member to give you a gift. Most commonly, as long as we can still negotiate this for you, the sellers are going to be willing to pay some of your closing costs. I see a lot of these where the buyer's paying an out-of-pocket home inspection fee of $500, $600, and then an out-of-pocket appraisal fee of $500, $600, $700, and then maybe they have just like a couple grand or like $1,000 or $2,000 extra left to pay on closing day. That's how you can get into these houses with these programs, even on like 350K, which is probably, I use that because it's very first-time buyer price friendly. But just imagine that 20% down is so out of the question. I do at least, like, I would say one of these types of deals every month, whether I do it in any of my states. Maryland has one of these, Virginia has one of these, DC has one of these, Texas has one. No, Texas has 2. But this is how we get people into houses these days that find it hard to save up money for closing. But if you go and compare the interest rate to, something else that a lender could offer you, it's not going to be too far off. That's 6.75. These rates are not forever. People end up getting out of these loans long before 30 years is over, or refinancing or what have you. But here's what an approximate monthly payment will look like for this. This is assuming you got to pay an HOA of $75 a month separately. Taxes there run about 2% per year in most counties in Texas, $583 a month, principal and interest of $22.28, and a total of $31.91. I mean, that's definitely something that two people could be able to tackle together for sure. Depends on how much money you make. And guess what? You don't even have to be a first-time buyer for that specific loan. I mean, that is the non-bond FHA option that's paired with no mortgage credit certificate. Credit certificate is something that you could get. That's something that would give you even more tax savings. It's something that we can talk about offline. So there's that option, and then there's the what I call the grant, or the one that's really forgivable within less than a year. That other one has a higher interest rate usually than this scenario I just showed you. But in theory, you can streamline out of that high rate into a new FHA loan soon after closing. That's if you still qualify for it, should the rate market be favorable to that borrower. So if you're going to do that 2 or 3% assistance grant loan, then that money is like yours real soon. The restrictions of this, there's income limits based on by county. Conventional makes it tough. They got some stricter income limits there, but FHA doesn't have the strict limits. Here's an example here showing several counties here, and then Travis County is $167,000 and change, and that's for a non-targeted area. You're far more likely to buy in a non-targeted area than a targeted. Income limits are based on the number of adults and people will be living full-time in the house. There's sale price limits. For the one I showed, for the non-bond FHA, there's none. And even if there is one for these really aren't that restrictive. I mean, you really have to go high on the sales price for that sales price restriction to cut you off of a home that you wanted. Now, one drawback to this, there is a recapture tax that applies if, number one, you sell the home within 3 years. Number two, you make a profit. Number three, the income increases at least 5% above and beyond the income limit for the county for every year the borrower lived in the home. That's also really rare to happen, but the way you get out of that is if you don't sell the home within 9 years. But yeah, so there's that. Like I said before, there's a 1% origination fee. Underwriting, 620 minimum credit score. Debt to income ratios, meaning they measure your cash flow, your amount of money coming in for you every month on your paychecks versus what you got to make in payments on this house and other debt. It's favorable to borrowers here. It does allow up to 56.99% debt to income ratio on FHA. There's no payment shock or previously living rent-free restrictions on that. Those other states I just talked about, and probably other states around the country that have this type of thing set up, they don't necessarily have 56.99% maximum debt to income ratio. Now, that's based on if your approval certificate from the FHA still allows that too. So I'm not saying that everybody gets to use that debt to income ratio max. Then 1 to 4 unit houses are okay as long as you're moving into this full-time primary residence. There's no max savings amount. A home buyer's education course is required. Really knock that out in like a couple hours online. It's not that tough. You don't have to go anywhere for it. And a couple other things. I mean, Texas Heroes, you can get additional savings with a mortgage credit certificate, as I've mentioned before. Recently, this servicer has turned us off. They do require like a new survey usually be done. So we've actually started to prefer in my office TDHCA, which if that video isn't live here, it'll be live within like a week or 2 or 3. But we use this loan because savings are tough. And the big thing, again, you can combine this with seller closing costs help. On an FHA loan, they can give you up to 4% of the sales price in seller subsidies. So that cash to close there, which was $9,000 and change, that is less than 4%. That's less than 3%, actually, also of that $350K sales price. So you could be walking into closing day just only having paid, really, possible, an appraisal and a home inspection fee. So I see that pretty routinely with buyers only bringing like $1,000 or $2,000 to closing on these types of deals. But guys, you can do this. This is what I get so many first-time buyers into, just all the time. It's very favorable. And who would have thought this would have existed, right? I mean, that's a ton of money going your way. So talk to me about it offline if you want. Also, highly recommend you watch my first-time buyer guide. If you've never done this before, you want to find somewhere to start to learn all this stuff, that's exactly where I'd go. It's going to teach you everything that I would want to know if I didn't know anything about the home buying process at all. But guys, call me, text me anytime. Happy to talk to you, and look forward to seeing your application come in and getting you into a new home. Thank you.